you're watching Market Meter on Money9. I'm Sakshi Batra, and on this show, we get you an update of how the markets have been trading in the first half of trading session and what is in store for the markets from here on. To help us understand and make the most of what the markets are looking like and to decipher the current direction of the markets is a very special guest joining in. Mr. Gaurav Garg joins in from CapitalVia Global Research. Good afternoon, sir, and thank you very much for joining in. It's a pleasure to have you back with us on Money9. First question to you, help us understand what are you making of the markets, the record high levels that we've been witnessing for the last 2 or 3 trading sessions. Is it time to stay a little bit cautious, or is it time to ride the momentum?
Yeah, hi, good afternoon, Sakshi. It's always nice to interact with you on the Money9 show. So yes, I think last few weeks have been like really good for the market, especially fueled by rapid decrease in the COVID-19 cases that we've seen now. The cases are in the tune of around 1,20,000 or so. Also, the pace of vaccination program is increased. For last 2-3 days, we are seeing that more than 3 million people are getting vaccination every day. So I think all these things are leading a good rally in the market. Q4 numbers have been good. More or less, I think market for a very short term, if we see market is in a bullish phase because all the global and local cues are in support. Many state governments have eased lockdown restrictions starting today. So I think short-term momentum seems to be on the bullish side, and we might be able to see some new all-time high levels coming in the next few weeks.
Okay, could you put a number to that? What kind of levels are you expecting for the markets, especially in
Nifty? First target for Nifty would be definitely 16,000. So 16,000 is a level to watch out for, and it is almost around 400 points from here now. Nifty is trading at around 15,500 plus levels already. So I think yes, in next few weeks we should be definitely eyeing 16,000 as a level, because that is a big psychological number as well, and that is just around 450 points.
Right. Also, I wanted to understand, a bit of confusion among investors right now is the kind of data points that are coming in from all across. On the one hand, we've just seen that the Q4 GDP numbers have come in, FY21 GDP numbers have come in, although most of the street estimates were much lower for these numbers, and they've come in better than expectations, so which is why the markets have cheered them on the one hand. On the other hand, we've actually seen the RBI put out a cautionary note saying that perhaps stock markets are at the steep valuations, they may be in a stock bubble as well. How should investors really read into all of this?
Yeah, so on the GDP front, I think more or less the numbers have been in the line of expectations. Last 15-20 days of March, there was significant rise in COVID cases which impacted, otherwise the numbers could have been even better. So from GDP front, I think the numbers are mostly in line, and that is why we have seen markets almost not kind of reacting to GDP numbers as well. On the RBI cautioning investors, I think it is very good step by RBI, because what happens is when we see such a huge rally of 70-80%, I mean stocks which are not very good in fundamentals as well, they also tend to rise because investors just try to accumulate whatever they feel like accumulating. And hence, I think that word of caution is good. However, I mean, on the other side, there are still very good fundamentally very good companies which are available at right valuations as well. And if an investor does a good bit of research and invests in quality companies and the business which he or she understands, I think that should not be a problem. I think RBI caution has to more do with companies which are not very sound in fundamental, and probably because of this extreme bullish phase of the market, these companies have also risen by 300-200% as well. So there, I think definitely investors need to be a bit more cautious.
Okay, understood that. Let me just take a view on some of the sectors that are in limelight right now, the stocks that are in limelight. Let's start off with the auto sector that is going to be the talk of the town today because of the sales numbers that have started to pour in, starting with numbers from Bajaj Auto, which have been good, Tata Motors, decent inline numbers as well. What is your take in the entire auto space? Where are you at over here? Are you looking at two-wheelers, four-wheelers, or the rural market? What kind of take would you have on the auto space, and how would you advise investors to approach it?
Yeah, so I think as expected, auto sales numbers are down drastically in the month of May because most of the states were under lockdown, and auto was a sector which was not allowed to function. So definitely there was expectation. From 1st June, a lot of states are giving. They are easing lockdown restrictions, and auto as a sector is expected to pick up. We have seen after first lockdown as well that people were inclined towards purchasing their own vehicles and then avoiding public transport. So I think this time as well, people would be inclined towards that particular trend only. Lower interest rate regime is expected to support this particular behavior of people, wherein people would definitely want to own their own vehicle. So auto space definitely we are bullish upon. And I think stocks like Maruti Suzuki, Hero MotoCorp, and Bajaj Auto, I think these three are definitely on our radar, and these three are expected to do well. One, because they are market leaders, and second, I think they have very good distribution and reach. So they should be definitely looked at by investors.
Okay. Also, one more question on these particular stocks that have been buzzing off late. One is Reliance Industries that has been up about 10-12% in the last 4-5 sessions. What is pushing this stock higher? What are the triggers that you expect to take this stock further from here on? And what's your advice here? And on the FMCG major ITC also, on the back of the earnings and all of that as well. So how are you looking at these two particular counters, heavyweights?
Yeah, so I think Reliance, it was long due. I guess it has not participated in the rally which the market saw. For last 2-3 months, after the farmers' protest started, it was under tremendous pressure because of sentimental reasons as well. So I think the fall in Reliance stock was more to do with emotional and sentimental reason rather than fundamental. In fact, Reliance posted very good results as well. So I think it was long due that Reliance participates in this particular rally, and hence we have seen some good rally in the stock. I think technically as well, the stock is looking good, and it can touch levels of 2250 as well in coming few days. With respect to ITC, ITC is definitely one of our good picks. The stock has been under a lot of pressure. I think it is predominantly because of ESG norms of various fund managers. Also, because the company has high dividend yield, and now taxation rules have been changed for high dividend yield companies, and dividend in the hands of investor is now taxable. So I think these two factors put together, ITC is not able to perform. But yes, from here on, especially this budget, there has been no imposing of taxes on cigarettes, etc. I think from taxation perspective as well, I think the stock is rightly placed to be accumulated. And from dividend yield perspective as well, generally it gives 10 rupees as dividend, so 5% is the dividend yield as of now. So somebody who is eyeing a dividend and as well as growth can definitely try and accumulate this stock with a target of 260 rupees in coming future.
Okay, 260 rupees is the target for ITC for investors who are looking for a medium to long-term perspective to hold this counter from Mr. Garg's recommendations. So we've got one recommendation from you. Which are your other recommendations for the day?
Yeah, so other recommendation is ABB. I think this company is also rightly placed technically as well. For last few days, the stock is doing good. It has broken its major resistance levels as well. Although also with the economy opening up, this company is rightly placed to execute most of its projects on time now. And the sector is also a sector wherein there is high entry barrier. So this company, I think, is very good at this point in time and this price point. I think one who is bullish on the infrastructure sector can actually bet on this particular stock with a target price of 2150 for a holding period of around 1.5 years.
Okay, so ABB is something that you can definitely look at for the momentum catching on this stock after a whole lot long time, and this could be a stock that could be on your radar from here. For your last recommendation, which is the sector that you've picked out and the stock also?
So again, we'll go to FMCG sector. I think the FMCG biggie Britannia is one of our top picks. It's a 100-year-old company with a lot of leading brands in mid-premium biscuit category as well. So this company has done well. Results are also good. The company has been increasing its market share in the segments that it leads. Currently, it is trading at around 3450 levels, and one can accumulate this particular stock for a target price of 4,000 in next 1.5 years. So I think this is also one good pick. Fundamentally, very strong company, and a lot of brands are market leaders in their own category.
Okay, then. Thank you very much, Mr. Garg, for sharing these stock recommendations and your thoughts on the markets going forward from here on. I'm sure all of this is going to help all our viewers also take a call on their investments going forward. And then let's quickly take a look at how the markets are trading at this point in time. The benchmark indices did open up with a gap up, and we had seen like record high levels for the Nifty again today. But soon they came under heavy selling pressure, profit booking at higher levels. Right now, the Sensex is inching back into the green after being, slipping into the red and, being at the low point of the day. It's now inching up again. We can closely see now that 51,966, it's inching towards that closer to 52,000 mark, which it had opened in today's trading session. For the Nifty 50, it's absolutely flat trade with a negative bias right now, 15,575 for this index right now. The banking index is still down about 0.5% lower in trade today, and so are the broader market indices, about 0.4% downtick for those BSE mid cap and BSE small cap indices in today's trading session. Let's quickly take a look at how the sectoral picture is emerging. There is a lot of red that we can see on the screens. Only if you see, barring two indices, the auto and the FMCG. The auto also is inching up as and when the numbers are coming in, and some companies are reporting better than estimated, not just the earnings, but in fact the sales numbers that have started to come in for the month of May. That is actually pulling the indices, the Nifty auto index, a little bit higher in today's trading session. FMCG index definitely on top of the radar of our experts as well. Mr. Gaurav Garg did point out two stocks, particularly the heavyweights ITC and Britannia, as his top bets for the long term for all those investors looking to grab a piece of the FMCG stocks at this point in time. Other than that, if you see both the banking indices, PSU banks, private banks, pharma, metals are also down by almost 2% today. Realty indices are seeing profit booking of 1% as well. Most of the indices are actually down by about 0.5% lower in today's trading session. So the market breadth is actually favoring the declines at this point in time. We'll just have to see how towards the last half of trading session or the last 1 hour of trading session, if this picture also changes at this point in time. Let's take a look at the gainers and the losers picture also for the Nifty 50, ONGC, Bajaj Finance, Bajaj Auto after the sales numbers, SBI and HDFC. These are the counters that are still holding up the indices into the green. Or contributing towards or stemming the fall for the markets right now. 3.5% uptick for the ONGC counter. The other counters are up in the range of 1 to 1.5 to almost 2% also as well. For the laggards, let's quickly see which are the stocks that are dragging the markets today. The metal indices and the stocks from that counter. From that index, Tata Steel, JSW Steel down about almost 2.5% in trade. ICICI Bank dragging the markets 1.5% lower. Ultratech Cement and Grasim, the other counters from the capital goods space and in the industrial space, that's down by almost 1 to 2% in trade. But overall, the market breadth is still low. We'll just have to see whether towards the end it does change the picture as well, because we've seen the record high levels, but we'll have to see whether these momentum sustains or not. Mr. Garg did point out that for the short term, he does expect the bullish trend to continue as well. We'll keep you posted on all the market updates, so stay tuned with us on Money9.com.